After the closing bell, Dow component Disney delivered the highest quarterly earnings in the company's history. Disney did it with people flocking to its theme parks to escape this winter's bitter cold and snow, filling theaters showing its blockbuster animated movie Frozen, and turning to ESPN, the ABC network, and all of its other TV holdings. Here's a look at today's numbers. Disney posted earnings after charges of $1.11 a share. That was 15 cents more than analyst estimates of 96 cents. Revenues also beat forecasts, topping $11.5 billion. In after-hours trading, Disney shares rose as much as 2%. They were down a fraction in the regular session. Here's Morgan Brennan with more on those Disney's results and the key takeaway for investors.
Mega blockbuster Frozen has been getting all of the attention when it comes to Disney, and with nearly $1.2 billion grossed, certainly the main driver of growth in the company's studio division. But the bigger story is that all 5 of Disney's main businesses, so media and networks, parks and resorts, studio, consumer products, and interactive, all grew strongly. Each one posted double-digit increases in operating income, contributing to the highest quarterly earnings per share in the history of the company. And at $1.11 per share, that blew away analyst estimates of 96 cents. Even the company's smallest unit, Interactive, which had been losing money, is now logging a profit, thanks to its Disney Infinity video games and toys. For Nightly Business Report, I'm Morgan Brennan in Los Angeles.
Wide array of offerings and key acquisitions have helped Disney make the mouse that roars, riding big wins at the box office, in home entertainment and theme parks, to upside surprises in every quarter over the past year. And we took a closer look at what makes Disney such a darling for investors.
Start with Frozen, which Disney certainly isn't. It's the highest grossing animated feature film ever. The movie crossed the $1 billion mark in box office in March, just 4 months after it was released. Frozen, along with Thor: The Dark World, has income at Disney Studio Group skyrocketing. Overall box office take since January of 2013, more than $2 billion. Thor is part of Disney's Marvel unit, where the hits just keep on coming. Captain America: The Winter Soldier just made Marvel the most successful movie brand of all time, eclipsing Harry Potter. Who's third? Well, Disney's own Star Wars, of course.
You could argue that having all of these different brands under their wing, they have a veritable Mount Rushmore of huge movie brands at their disposal.
Gamers made Disney's Infinity the most popular hybrid toy and video game since its launch last summer. It's done so well, they recently announced Marvel's superheroes will be getting together in a second edition.
I think this company could be in a golden 2 or 3 year period. It's just going to be a great 2 or 3 years for the company, and I think the stock has maybe 30–40% upside over that period.
The other pieces of the Disney empire have also performed during the past 4 quarters. Theme park attendance, new records, and the media networks also made more money. ESPN is still the single biggest piece of the Disney machine, accounting for 30% of the company's total value. The sports network had higher ad revenues, and it is still, by far, the most expensive cable channel for operators to provide to their subscribers. Those operators also had to pay higher fees to bring the Disney Channel to their customers, making Disney, indeed, the mouse that roars.